Hey guys, welcome back. In this video, we're going to be covering two main points on Beyond Meat. The Q3 earnings right around the corner. What is the company going to report? And based on those results, what is a real fair value assessment of the stock Beyond Meat? I see people putting out some pretty wide price targets. $2, $5, $10, $40, $1,000. We're going to do a no-nonsense talk about fair value for Beyond Meat. And then whatever happens with whatever momentum play, FOMO play, short squeeze, whatever you want to call it, maybe we'll touch on that at the end of this video. Let's get right into it. Hey guys, welcome back. It is Sunday, November 2nd, and we're talking Beyond Meat in this video. BYND is the ticker. I know some of you guys are asking, Tony, why are you covering this stock? You already sold into the run-up 2 weeks ago. And that is a great question, because I still see a lot of misinformation going on out there on social media. And I've been doing this short squeeze thing now, paying attention to meme stocks every single day, all day long for 4 or 5 years. And if I can share any of my learnings with you guys to help you make money or not lose money, then I'd like to do that. And we successfully called this trade Saturday, October 18th, and sold into the run-up, telling you guys the entire time from Monday through Wednesday, take your profits off the table. Don't be afraid to unload. Don't be a bag holder. And it has fallen now from well over $8 down to $1.65. And, sometimes these things have a little bit of a second life, but we got a lot of important dates coming up with Beyond Meat, including the Q3 earnings this coming week. I will be streaming that live, so be sure and tune in after hours on November 4th to catch that. And on top of that, we have a shareholders meeting on November 19th. A lot of important things for you to understand if you are going to be voting in that shareholder meeting. As for me, I don't own any Beyond Meat right now. As I said, I sold into this run up right here. But when I see the continued misinformation, I think this is a great learning opportunity for everybody. Maybe you get burned in this one. Maybe you got out and got some profits. But if you can take away some learnings from this ticker, even if you ended up losing money, it will help you in future trades. The biggest misinformation campaign that is still going on, in my opinion, is people telling you that these 316 million new shares are not part of the float, they're not trading, and they are not lendable to shorts. And again, I'm going to put something down in the video description below, and I want you guys to use it to fact check what is actually going on here, because in my opinion anyways, these people putting out this social media messaging saying the shares aren't trading are misinforming you guys, maybe intentionally, maybe accidentally, but I'm not a big fan of people pushing out purposeful misinformation, especially when it has potentially made you hold from $8 all the way down to $1.65. At this point, whatever you believe is what you're going to believe, and there's probably not anything I can do this time around to help educate you. Maybe you'll come back and say, man, I wish I would have listened to him, and maybe we'll see you on the next ticker. But as you can see on the screen here, the free float for Beyond is 380 million shares, 379-ish, with the 316.9 million that were issued in October. And the short interest, as we know it, official, 51 million or whatever, it's probably 63, 65-ish according to Ortex. I don't want you to get hung up on what the short interest is in terms of number of shares. I really want you to focus on the fact that there are far more shares out there trading right now, far more liquidity. It's hard to have a short squeeze when all these shares get dumped into the market. And that is also why the cost to borrow plummeted from 500% to what we're seeing right here, 5%. There's plenty of evidence that these new shares are trading. Look at the cost to borrow, look at the price action. And if you're still praying for a short squeeze, man, I hope your prayers come true. But I'm not here telling you that this is a short squeeze stock. It never was. It was a FOMO momentum stock. We talked about that on October 18th. We talked about that on October 20th, 21st, and 22nd. What was the new share count and how were people misunderstanding it? How could you capitalize that, make some money, and not be a bag holder? Moving past that, with the Q3 earnings coming up, what's it gonna look like? this coming week. On October 24th, Beyond Meat dropped a filing on SEC. Edgar, you can go look it up, in 8K with some preliminary results for us to consider about what they are going to tell us next week, including expectations for earnings, gross margins, etc. And also the fact that there's going to be a non-cash impairment charge hitting the books for Q3, which is something we need to think about as well. Now, I've put together a spreadsheet to kind of take a look at what are the Q3 results likely to be based on the info we have here. And if we want to then consider what was not going to be on Q3, everything that happened in October, the debt for equity exchange, the new shares, the reduction of the debt, that will not exist on the Q3 results because Q3 only covers till the end of September. But we can do a pro forma analysis and take everything that happened in October and apply it to the Q3 expected results and see what it would look like if we included all the new dilution and the reduction of debt. So let's look at that spreadsheet that I put together for you guys. What we have here in the first column is the Q2 reported results from the company. And then in the second column, I have it called Q3 estimated. That is information that I drew from that 8K that I just had up on the screen a second ago, expecting revenue somewhere around 70 million. We can guess then that the net income will be somewhere around negative 30 million. Shares outstanding in Q3 would have been the same as in Q2. So earnings per share, we should see somewhere around negative 39, negative 40 cents. However, we want to know if the company paid off debt and if these shares increased, what would the earnings per share what would it have been if we have this new share count? Revenue doesn't change, net income doesn't change. Shares outstanding on this pro forma analysis, including the latest information from October, would change that earnings per share to negative 8 cents. And that is because we're dividing the loss, the negative 30 million, by a larger amount of shares. Now let's consider the balance sheet, which is the real reason why Beyond Meat made this change, this distressed debt for equity swap. They had to fix the balance sheet. Let's see how that looks. Q2, the company had 103 million total assets of 691 million, total debt of almost 1.2 billion, giving them a $206 million working capital and negative 677 million shareholders equity. In Q3, just to keep this easy, I'm going to assume that they didn't burn any cash. They probably did, but let's say that the cash for Q3 comes out at $100 million. They didn't change the debt. We shouldn't see any difference in the debt in the Q3 results. And so the working capital and the shareholders' equity here in the second column are still going to look pretty bad. But if we factor in the changes that they made in the month of October, wiping out the bulk of that debt, 1.1, almost $1.2 billion, exchanging it for shares and issuing some new convertible notes, about 200 million-ish, that completely fixes the balance sheet for the moment and gives them a new lease on life, a new chance here to turn the business around because they don't have the pressure of this upcoming debt maturities hanging over their head. They don't have an upside down balance sheet. So on a pro forma basis, if we include all of the October corporate actions, it's going to look something like this. Assets are going to go up. The total debt is going to go down considerably. The total liabilities is going to drop considerably. Working capital will still be positive, but even more importantly, now they have a positive shareholders equity. And even more importantly, the convertible debt maturities got pushed out to what, like 2030 now, I think it is. They have many years now to try and repair the business. So yeah, that was painful for anyone that held through that debt for equity swap because you got massively diluted, but it did enable the company to fix the balance sheet and buy itself a few more years of life to try and turn the business around. The final thing that I want to highlight on this tab before we go to the next tab, which is my fair value analysis, what is Beyond Meat actually worth today? I want to touch on the note that I have at the bottom of this tab. And again, a reminder that Beyond Meat has disclosed in that October 24th 8K that there will be a material non-cash impairment charge on long-lived assets. And the numbers that I'm showing here on my analysis, I'm not trying to guess how big is the asset impairment going to be, but it could affect this asset row that I have here, 691 and 993. It could be a material change lower on these numbers, which would also affect shareholders' equity. So we don't have exact details, and I'm not going to try and guess it. We'll find out together in the coming days. Now, let's move on and talk about what is Beyond Meat worth right now. If we were to take all emotion, all FOMO, all hopium, that's fine. I mean, we can still have, the charts can do whatever the charts are going to do, momentum, blah, blah, blah. But if we take all of that out, what is it actually worth based on any normal financial analysis that an analyst, a professional analyst or an amateur one like me, how would we calculate the fair value of Beyond Meat? And how can you use that information to maybe get a safer entry if you're interested in trying to roll the dice and have a speculative long-term play on Beyond Meat? No guarantees here, but let's look at the next tab on my fair value analysis. Some of you guys are going to like this. Some of you won't. It depends if you're emotional about this play or rational, logical, and trying to do just a financial analysis. But I have done 3 different methods of analyzing the fair value of Beyond Meat based on today's information, this week's information. I did a discounted cash flow analysis, a sum of the parts analysis, and a EV to sales ratio analysis. Each of these different methods gives us a different way of looking at the trade and a range of prices. And we'll get into that in a second, but I want to start off talking about what I have highlighted in pink, my view of looking at Beyond Meat right now. It is a 800 million enterprise value call option if you're investing in Beyond Meat based on this category, this company recovering. Are sales going to increase? Is it going to recover? With, as we'll talk about down here in the chart, a hard floor of around $1 and a ceiling of $2.50. And when we're talking ceiling, remember we're talking normal financial analysis. I'm not talking short squeeze. This is to give you some guide rails about how to logically think about this play. I'm not trying to do a momentum or short squeeze price ceiling, because there are no limits if something really pops off. But how is Wall Street looking at this? That's what you want to know, because where is the smart money likely to slide in and support this stock? That's really what we want to know at the end of the day, right? So let's talk about the 3 categories we have here. The first one I'm going to call, highlighted in green, our aggressive bull case, and that is a discounted cash flow analysis, assuming a growth rate that the company starts increasing revenue 12 to 19% annually. And in that scenario, while they're improving their revenue growth rate, we're also going to assume that they're improving margins, increasing gross margin, and improving operating expenses to improve also the operating profits. I'm not going to do a detailed breakdown of my DCF. I'll show you exactly everything you need to do if you want to take my notes and go run your own DCF analysis, but I need to zoom out to show you that. Let's finish talking about these 3 categories. $2.03 is our high-end estimate for the value of Beyond Meat, assuming that it's growing 12 to 19% for the next 5 years. Do you think Beyond Meat is going to grow from here or not? Even if you do, $2.03 is where it's headed based on a DCF analysis. If we think that they're going to break even through 2027, break even for the next couple of years, no improvement in the business, and we do a sum of the parts analysis, and we're looking at cash and assets at face value, I come up with a fair value price for Beyond Meat of around $1.12 per share. And we're going to call that our base case. And then our more bearish case, if we assume no turnaround whatsoever, and we're just looking at enterprise value versus a sales multiplier, I'm coming up with a per share valuation of about 58 cents. There are some things, I'm going to zoom out here for those of you that want to run your own analysis. You probably want to read the notes that I have off to the right here, and you can do your own analysis. Throw it in ChatGPT or Grok or Perplexity, whatever you want, and see what you come up with. Fact check anything on here. You should do that. You should do that. And you should also read every single one of these 7 notes that I have down here, because even what I have here, range between 58 cents and $2 is not even counting the fact that we have more dilution that is going to be approved in an upcoming vote on November 19th. There's more dilution coming to this company. So per share price that you see in this video today might not be good in 17 days, in 2 weeks, depending on how that vote goes. And look, all of the note holders that are now new shareholders, 316 million of them, they were shareholders for the date of record of this upcoming vote, which was October 16th, here down in note number 6. Even if they sold on the 18th or the 20th or the 21st or 22nd, even if they sold, they're still going to have 316 million votes. And so it's just going to be my guess that every proposal on the vote on November 19th is going to pass, because that was probably part of the little handshake agreement that Beyond Meat and the note holders had is, hey, we're going to give you this sweet debt for equity swap. We're going to put you in the catbird seat, and we need your vote to help us survive for the next several years. It would be in the note holders' best interest to approve those proposals. It might not be in your best interest as a shareholder. And I want you to listen to what I'm saying, because we see this in a lot of tickers, and you probably know a few, where votes go the way they go because the note holders are being taken care of. It is up to you, the equity shareholder, to realize when it's time to get out of a play ahead of an upcoming dilution, because as much as you might not want things to go the way they're going to go, the vote's going to go the way it's going to go. And if you're worried about something, now's your chance to consider getting out. Don't be mad at anybody after the fact if the vote doesn't go the way you want and then you get massively diluted. You've got from now till November 19th to read every note that I have written under here, and I'm going to bet that the votes will pass and that these prices that I have here are going to be decreased because of upcoming future dilution. More shares, same market cap, the price is going to come down per share. That's just basic finance math. Anyhow, I know it's not the best news in the world, but this gives you some information to think about between now and the 19th. What is the safe price that I would buy Beyond Meat? You know, real talk here. If I was going to buy it, where would I feel safe right now? Around 60 cents, around 58 cents. Anything above that, if you start going into the base case or the aggressive bull case, those are possible, but they're more speculative. You have to have a more optimistic assessment of what's going to happen. And you still got to ignore what's coming on November 19th. And I'm not going to ignore what's coming on November 19th. So I don't think the shorts are scared. They know what's coming with the Q3 earnings on the 4th, and they know what's coming with that vote. And you better know what's coming. If you have any questions or comments, let me know down below. I'm Tony Denaro, and I will see you on November 4th after hours. Join me where we listen in live to management's comments and the analyst Q&A.